Welcome to the Michigan Note Investor Forum. Tonight, we're very excited to have Derreck Long, an IRA specialist from Quest Trust Company. We've known Derreck, I think we reflected back since 2018. We came over to the office in Houston because Phil's from Houston, and we had heard about the opportunity in using your IRA in real estate investing, and specifically notes we've done. So we're excited to have you, Derreck. Welcome, and take it away. We're excited to hear what you've got for us tonight.
Yeah, well, thank you. I appreciate you guys having me on here. As I kind of go over everything today, I want this to be an open conversation. So if I'm on a specific slide, understand that as we're on these slides, you guys can ask me questions. You can put it in the chat box. I'll stop. I'll answer questions right away. I'll answer it live if you just want to unmute yourself and ask, so you won't affect it. Make sure this is a three-way conversation. All right, guys? I do call this a way to invest in real estate tax-free. And this is because anytime we use a self-directed IRA, right, it's a great way to leverage money that you already have that's not taxable, and money that you can invest and have the earnings come back and avoid taxation. So we're going to kind of be going over some of that. Quick disclaimer, guys, is I'm only here for educational purposes. Right? I'm not giving you any type of legal advice, investment advice, education advice. I'm really here just to talk to you about self-directed IRAs. Now, I do represent Quest Trust Company, so I'm a little biased because I think Quest is the best. However, everything I talk about today applies to any self-directed IRA company. So if you choose not to work with me, you can take everything I'm giving you and just use it, for any custodian out there. All right. So we're gonna do real quick is a little bit about me. I am from Arizona. I spent 4 years in the Army, which I used the GI Bill, went to college. Realized very quickly I didn't like working for the government, and I wanted to start doing something a little different. So I started investing in real estate, and I was using my dad was using my IRA to teach me how to get started. And so it's funny is all that being said, as of today, I own 3 rental properties. I have 7 notes and 2 oil and gas investments, all active right now today, while working a full-time job. So I think that's very important because sometimes people think to get started and invest in real estate, you need to quit your current career, and you don't, right? And Phil's the prime example. He still works, but he still invests, and it's because this is what you do, and this is how you can build wealth, and it makes sense. So understand that, guys, you can get started investing in real estate. You usually just need a good mentor, a good teacher, someone there that's able to help you out, and that's the purpose of this organization. So once again, guys, make sure you're asking your questions. All right. We're going to start off with real basic, and I say the IRS breaks everything down into 2 types of entities. The first one is a taxable entity, right? The second one, non-taxable. Duh, it makes sense, right? So if we think about it this way, right, a taxable entities are usually what you're familiar with. Right? This is anything you establish. This could be your LLC, a C Corp, an S Corp, a trust, you as an individual, right? When you make profit, right? When you work your job, when you get a 1099, a W-2, you have to pay your taxes before you get to spend that money. Well, this makes sense. Well, on the other side of the fence, those non-taxable entities, these could be things like churches, charities, nonprofit organizations, certain hospitals in certain situations, right? But we're really focusing mainly on self-directed IRAs, solo 401ks, and QRP plans, which I can set up any of these, right? And believe it or not, a self-directed IRA files the same type of tax return a church would. Think about that just for a minute. That I could use an IRA and I could purchase an asset. A church could purchase an asset, and they file the same tax return. This is how the IRS views these type of entities. So it's very unique, and a lot of times people don't think about it that way, but it's the truth. Now, when we talk about self-directed IRAs, we have to figure out what is it? What actually is a self-directed IRA? A lot of times when I ask this question, people give me all sorts of crazy answers. Believe it or not, guys, they're made up. There is no such thing as a self-directed IRA. This term is 100% marketing. The IRS does not recognize the term self-directed. They call it just an IRA. They call it just a 401k. They don't call it a solo 401k. We adopted these terms for marketing purposes. So I break it down to two different types of people. If I have a self-directed IRA at a Fidelity, a Charles Schwab, a Merrill Lynch, Vanguard, something like that, they let me self-directed into public assets. So what's a public asset? Stocks, bonds, mutual funds, CDs, EFTs lately, something that's publicly traded. If I have a self-directed IRA at Quest, we let you invest it into real estate, rentals, fix and flips, lending money like notes, syndications, joint ventures, all sorts of creative aspects of it. So which one's better, the real estate or the note or the stocks? Neither, right? It's what do you want to do? If I want to buy Apple stock, I have to set up a self-directed IRA at Fidelity. But if I want to buy property, I have to set up a self-directed IRA at Quest. No custodian's going to allow you to leverage both, right? Fidelity, you can't buy real estate. Quest, you can't buy stocks. So this is why most people end up with an account at both places. So understand when you hear the term self-directed IRAs, self-directed, it's marketing. That's all it is. It doesn't mean anything. You can look everywhere you want in the IRS tax code, all right? So I always like to bring up some of the benefits, first being really diversification. If I think of your retirement account right now, if you don't have a self-directed IRA, a lot of you guys out there will feel like you have it diversified. But you have it diversified in all of those public assets. Bonds, government bonds, right? Mutual funds, stocks, maybe an annuity. But then the market crashes and what happens? We see all our public assets go down. So I argue not take the full balance, but let's take a small portion of those public assets and move it to the private side. When we're on the private side, now we have a little bit more control. Now we have what I like to call true diversification. I have my public assets here. I got my private assets here. I never say one's better than the others. They're just different. They both serve a purpose. All right. So the biggest benefit, though, that I think of when we think about self-directed IRAs is really the tax savings. I always describe it first as a fix and flip. But let's say me as an individual, Derreck Long, did a fix and flip on a property and I made 10 grand. I don't get to really keep 10 grand, do I? The IRS, they get to come in and they get to tax me. It could be capital gains tax, could be income tax, it could be an earning tax, right? But the IRS, they get to tax me because Derreck Long did the fix and flip. But did you know your IRA could do the exact same fix and flip, earn the exact same $10,000, and none of it would be taxable today? And in the right account, it's truly tax-free. And I'll show you what I mean by that in a minute. So think about that for a minute. I could do every investment you guys are doing right now. I don't care what it is, but you could use an IRA instead and avoid all of the taxes on your earnings. That's pretty powerful. It helps you compound that interest. You actually make more profit in the meantime. One of the biggest reasons, though, I think, and it's something that I notice a lot of people seem to miss, is, and I like to call it investing in what you know best. You guys are all on this platform right now because you want to learn more about investing in real estate. But if I call on one of you randomly and say, well, do you have a 401k? Yeah, well, what's it invested in? Large caps, Fortune 500 stocks. Why? If you're on and you're learning to be a real estate investor, then why is it that the majority of your funds are probably sitting in a public asset versus a private? Most of the time, the answer is just because you didn't know. You didn't know this was an option. You didn't know we could use your retirement funds to purchase that new rental that you're looking at. You didn't know you could use your retirement funds to invest into that multifamily syndication instead of using your personal capital today. So I think investing in what you know best is the biggest thing that a lot of people just don't miss, that I think is a little sentimental. Now, there's all types of accounts that can be self-directed, and I break it down to 3 categories. I start with the personal plans. Personal plans being traditional and Roth IRA. Most of you out there already have a traditional IRA and probably don't realize it. Needed some water. But a traditional IRA, this is what your 401k at your job will turn into. or if you have a 403B, a 457, a pension plan, a TRS, a TSP, all of these will turn into a traditional IRA eventually, right? Now, this is the one that we call as a tax deferred account. It grows tax deferred. So any profit I make, I don't pay taxes today. I get to defer them until I'm older. I get to defer my taxation until I'm 72. Now at 72, the IRS steps in. They say, hey, you're getting older. You have an account you haven't paid taxes on, so they make you pull the money out at that point in time. Now, at that point in time, that's when you pay your taxes. The other account, though, is that Roth IRA. And you hear a lot of people talk about it as the sexy account, the tax-free account. Believe it or not, we can do those same actions leveraging a Roth, and you never pay taxes on the earnings, period. Even when you take a distribution. But to get money in there, you have to pay some form of tax today. So I always say, if I had a traditional IRA, and on the traditional IRA, I had $100,000. Option one, we grow it, right? And as we grow it, it grows tax deferred. Remember, on the tax deferred side, I could grow it to $1 million, let's say. 72, the IRS steps in and they make me pull out some cash, right? They say, hey, you're getting older, you got to pay your tax on that $1 million. Well, if I keep it in a 20% tax bracket, that means you owe $200,000 in taxes. And you started with 100, grew it to $1 million, you owe 200 in taxes. That's not bad. It's not good. It is what it is. Option two, we take that same $100,000. You say, you know what? I'm going to pay taxes today on that money. We move it to the Roth IRA. When we do this movement, we call it a Roth conversion. All that 100,000 is added to you as income. So let's just assume it puts you in the highest bracket. We'll even overestimate it a little bit. We'll call it 40%. Well, notice you owe $40,000 in taxes in this example. But now the $100,000, as it grows, when it grows to that $1 million, it really is tax free. Notice option one, we owe 200,000. Option two, we owe 40,000. So you would think more people would want to leverage the Roth IRA. Unfortunately, though, most people will never do a Roth conversion. And if you listen to my story, option one, I let you defer your taxes till you're older. And that's what a lot of people like to do. Well, I don't want to pay anything today because option two, I gave you a $40,000 tax bill. Well, I don't know about that. I'll wait till next year to do that conversion. Well, 100,000 doesn't stay 100, right? It grows to 110, 120. Well, if you didn't convert 100,000, you're going to convert 120. Well, I'll wait till next year. Well, that 120 grows to 150. The 150 grows to 200, and it keeps going and going. And a lot of people never take the leap to do the Roth conversion. So that's why I call these the personal plans. We do have question?
Yeah, I wanted to ask, at what time of year do you find, let's say people leave their job and they have their 401k, and maybe it's the end of the year. Do people typically do this transfer like in the beginning of the year? So it's like when they're not
great question. So
they don't have income in the same year.
So it's a great question. And believe it or not, in December, I see a lot of small Roth conversions, right? So I gave you the example of 100, but you don't have to convert your full account. Okay. But let's say I made $100,000 this year and 110 is my next tax bracket. I may tell my CPA, hey, let's do a $9,000 Roth conversion, right? That way I know, hey, I can afford $9,000 in taxes. It's not going to bump me up a bracket. I'm good. But January rolls around and I see very large Roth conversions. Why is that? Because you don't owe the taxes until April of the following year.
Right.
That gives you almost a year and a half to plan for it.
Right.
So notice in December, I see a lot of small conversions. And in January, I see the big conversions. And it's because that's how people are planning. So I love that question. Good question, Melanie.
Sure.
Yeah. Now, those employer plans I have sitting up there on the screen are typically used if you're self-employed or you need big tax deductions. As an example, just with the SEP, you can set up, you can put up to $61,000 in that account and take that as a tax deduction. So that's pretty powerful. I teach a whole class just on the employer plan. So if you have specific questions, just let me know. And the last one is what I call the specialty accounts, the Coverdell and the HSA. The Coverdell ESA account is for your kids, and the health savings account is for your health expenses. So we can actually self-direct any one of these accounts into a real estate investment and have all of your earnings avoid all of the taxation. So that's the goal to each one of these. And I teach classes on those specialty accounts, employer plans, and I teach a whole class just on the Roth conversion. If you guys are interested in any of those, just reach out and let me know. All right. So knowing this, I always say there's some big restrictions on IRAs. We got to go back to the very first slide where I showed there's taxable entities and non-taxable entities. Remember, the IRA falls on the non-taxable side. So if the IRS will let you avoid all the taxes on your earnings, they're going to put some big restrictions in there. So, and I always say there's investment restrictions, transaction restrictions, and really the only one we care about, which is people restrictions, all right? So the people restrictions is certain people your IRA, your self-directed IRA, your QRP plan, your solo 401k can't invest in, right? And the IRS says these people are what we call disqualified, right? So the first person the IRA can't invest into is you. I can't use my non-taxable entity, my self-directed IRA, and lend me money, the taxable guy, right? It just doesn't make sense. I can't use my IRA, buy myself a house and go live in it, and then say, hey, this is an investment. No, it's not an investment. That's a homestead. So we can't do that, right? Because we're mixing our non-taxable entity with our taxable entity. It just doesn't work. But it's not just you. It's this unique little list that I made. Oh my God, it looks so scary. This isn't as bad as you think, guys. I joke about it all the time. This is not your job to memorize this. This is my job. So I break it down real simple that your IRA can't invest into you. It can't invest into your spouse. It can't invest into your parents. And it cannot invest into your kids. That's it. Well, what if I set up an LLC? Nope, IRS is not that dumb, right? You just setting up a business or a corporation that you run or that you're a manager or a member of. Nope, that's still you, whether it's directly or indirectly you, it's still you. So my IRA can't buy something for my kids. My IRA can't lend money to my parents to start their own business. My IRA can't invest in my spouse's LLC to buy a property. Remember, that's mixing your taxable money with your non-taxable money. You just got to keep them separate. You can still do all the same deals you're doing. You just got to note that, hey, this deal I'm going to do in my IRA. This deal I'll do outside of my IRA. It's either A or B. It's that simple. Now, what's really scary is if you buy, sell, trade, loan, extend services or something like that, whether it's directly or indirectly, right, with an IRA and yourself or one of those disqualified people, the IRS will take away everything. A prohibited transaction, what they did is they gave you an entity that wasn't taxable and you abused it. So they will take away your entire retirement account. Think about that for a minute. That's money you guys have been saving up for 10, 15, 20 years, maybe longer in some cases. And by making one mistake, by trying to hide something, right, you could lose your entire retirement fund. It's very, very scary. But now that I've scared the pants on you, what can I do? Right? Well,
Derek, I want to just remember an example that someone gave that it sticks in my mind that made it so clear. So if you want to invest your IRA and you send it over to this, let's say, fix and flip, or no, this rental that turns into a rental, you cannot go over there and mow that lawn.
yes and no.
Oh, okay. I was like, I remember this like really, like you can't go mow that lawn. You can't do anything that would benefit,
That's correct. The IRS says that would be a contribution of time. You can't really contribute time to your IRA's investment. It doesn't make sense. So they call it an excess contribution, or in a few cases, they've called it a prohibited transaction.
Okay.
However, I'm going to play the reverse role for a minute.
Okay.
Is the IRS lurking in the bushes?
No.
Are they standing behind you watching you mow the lawn? So how do people get in trouble with those type of things? They call someone like me at my office on a recorded line audited by the Texas Banking Division and the IRS. And they say, hey, Derek, I'm doing all this prohibited stuff. What do you think I have to do? I got to report it. So I always want, all right, here's someone going like, whoa, tell me about your friend. What was your friend doing? Your friend may want to be careful. Your friend may not want to report that stuff to someone like me, right? We always try to prevent those type of things. So I always tell people, make sure you know who you're talking to, right? Which is why actually I put this number real quick on this on the screen. You can at any point in time, guys, whether you're a client of Quest or not, call them, and an IRA specialist will answer and help answer any questions you have. All right. They don't get a commission to sell you on anything. They can answer anything that you need help with, right? Whether you're a client of theirs or not. And get this, it's not automated. That number is a non-automated line. You call and someone picks up the dang phone. That's rare today's day and
How
age.
can I make your day?
Yeah,
That's how
every
they
time they
ask
answer, they go,
me.
how can I make your day?
How can I make your day? It's very customer service, Derek. We are very happy with the customer service at Quest.
So, but really, I always tell people, man, your IRA really can invest into anything. I made a small list of some choices up here from notes and mortgages, convertible notes, LLCs and joint ventures, real estate. Notice it's anything you guys are already doing. Your self-directed IRA, your solo 401k, your QRP plan can do all of these investments, all right, that you're already doing on a consistent basis. So for you as an investor, if you didn't realize this, you might actually have more money than you thought. You might be able to now, when you're looking at that syndication, that multifamily deal, instead of taking $50,000 out of your own checking account to do it, right? Well, keep yourself liquid and use your 401k or your IRA. Use the $50,000 of that account instead. And that's what people are looking for. So a lot of times for newer investors, especially, you probably have more money than you thought. So I always talk a little bit about how you can fund the IRA. It's pretty simple. You can make a contribution, right? Take money directly from your checking account, savings account, anything like that, and make it in there. You can transfer from another IRA, or you can even do a rollover from a 401k, 403b, etc. So Valerie just asked a great question. She says, are you set up where you can invest in crypto? If it's not next week, it's the week after. Yes, Quest will be set up to where you can use your IRA for cryptocurrency. So that is something that's new, and it's a big hit for a lot of people. And it's like in 10 days, maybe even less than 10 days, you'll be able to finally leverage your IRA for that stuff. So great question, Valerie. Thank you. Keep those questions coming, guys, too. Remember, this is an open conversation. I promise you won't interrupt me. All right. So real quick, I got a couple of case studies I was going to go over before we kind of end out the day and make sure that we answered everyone's questions. But anything before I dive into some quick case studies?
Hey, Derek, what was a QRP? You had that listed on one of your first slides.
So believe it or not, when you hear the term 401k, 403b, 457, all of those are actually a QRP plan, which stands for Qualified Retirement Plan. All right. 401k is actually a section of the tax code under IRS Revenue Code 408 little a. Not that I'm a nerd and have to read that stuff. All right. But the QRP plan is actually those documents that you have. So sometimes I end up with tax attorneys or CPAs, and they're like, well, I need a QRP plan. I'm like, yep, I got you. It's the same thing as a 401k. Some people just like to be nerds about it, like this guy. Funds in an HSA can be transferred to an IRA too. Well, they won't be transferred to an IRA. What would happen is we would just set you up an HSA with us. And then you could transfer funds from the HSA where you currently have it to your HSA here. It would be used the exact same way, except for that HSA, instead of investing in probably mutual funds or some basic stocks that your bank might offer you, we'd let you use those funds to purchase real estate or cryptocurrency. So good question.
Usually people think that, hey, I work at company X, in my case, Ford Motor Company, and I have an HSA through that. But what most people don't know is that Ford will allow you to transfer your HSA money from the Ford HSA program into like a Quest HSA account.
Absolutely.
So you don't have to only transfer it when you leave a company. It can happen
And you can
in
keep it
flight.
open.
Yeah, and by the way, if I do that at Ford, I would leave the Ford account open since I'm still employed there and I
Because
still
Ford
have funds going in.
contributes to it, right? They contribute to your HSA for you, correct?
No, I
No?
end up
Aw.
contributing.
I think they do. They do.
No,
But you
they
you
don't.
contribute too.
That's why our
Maybe they pull it
healthcare,
out every month. It makes it feel like they're contributing.
but they're not. It's all right.
So I'm going to do 2 quick case studies. These are very, very basic. And these are, this first one that I'm going to talk about was kind of a land deal. This is a real picture of the land actually out in Ocala, Florida. All right. I really love this transaction right here. And hold on, I see a question popped up. Thanks, Phil. Boom, love it. What was funny about this transaction is I did this deal in 2017. And this was the first real estate deal that I did when I had to call without my dad's help. My dad's been a big player in real estate for the last about 15 years. And so anytime I was looking at doing a deal or doing something, he was always there to kind of back me and review the paperwork. This is the first one I did with no help. You know, it was like, oh, no, I got this. I know what I'm doing now. So I was proud of this one. But notice this piece of land was $9,500. And believe it or not, I didn't even have $9,500 at the time in my IRA. But I was like, you know, it's in a good area. It was right on what is called College Road, if you're out there in Florida. And our plan was to sit on it for about 20 or 30 years inside of the IRA. We knew it would only appreciate in value. And because the property taxes typically on land are way cheaper than an actual property, we were comfortable with this. But once again, I didn't have $9,500. So I called up my buddy Brian, and he was an old Army buddy of mine. And I convinced him to split it with me. And we'd each move $4,700 into a Roth IRA and purchase this piece of land. And that was our plan. So that's literally what we did, right? So on the contract, instead of it reading Derreck, Long, and Brian buying the IRA, it read our IRA's name, Quest Trust Company for the benefit of Derreck's IRA 12345 as to an undivided interest of 50%. And Brian's IRA is an undivided interest of 50%. At closing, we each sent $4,700 from our IRAs over to the title company, and that was it. Now our IRAs own this physical property. I want you to think about what we just did, because we did nothing different than most of you guys would do outside of an IRA. We found a piece of land we wanted to buy. We partnered together. We could have formed an LLC or a joint venture. We chose not to because it was such a cheap piece of land. You know, it wasn't even an acre. It was literally more of like a lot, right? And so it was really, really small, and we were excited about it. And that was really it. So that's why we didn't form any joint ventures, LLCs. Sometimes people ask that, but we got unbelievably lucky. And I say something magical happened. So that piece of land, I don't know if you can see it right here. This is pretty much right where that piece of land is. Can you guys see my mouse? So we took this picture of a drone, but this land that was purchased right here, notice is attached to this golf course. All right. So this golf course wanted to buy the land, and they didn't even realize it was for sale. And they called us and they said, hey, we want to go ahead and purchase that land that you just purchased. So, sorry, I didn't mean to hit the mute button. So what was really funny is we end up selling this piece of land 45 days later for a little over $15,000. That's pretty awesome. Now, what sucks is that piece of land jumped up to like in a year and a half to a little over $100,000 in value, but we're not complaining. So what was cool is a little over $7,700 went back to each, my IRA and Brian's IRA, 100% tax-free. So I always said it was building wealth through unique techniques. Nothing special. You're not getting rich off this type of deal, but I enjoyed it. It was one of those little like, hey, that stepping stone. Some key takeaways about this. Notice 2 people used their IRA and they partnered together. I love that aspect of it. The percentage, if we look at the rate of return, was a little over 58% when you do the math on it. So nice first buy. Thank you, Valerie. This can be done with your kids. This is how I got started in real estate. So my dad would find these little deals and I'd put in a small dollar figure, $100, $500, something cheap. And a lot of times it wasn't even come from me, as my grandma gave me the money. But I said, you only get it if you put it in the IRA. Well, okay, grandma. You know, and lastly is all profits came back tax-free and we were in control. A lot of times people miss that control aspect. They don't realize how much control you can really have with a retirement account, right? Because they're so used to just seeing it just fluctuate in the market. Market's up, market's down, market's up, market's down. When here I had all the control I wanted. Another little deal is a way to kind of profit now. Notice when I'm talking about the IRA and stuff, for me, I'm 35 years old. So how can I use an IRA and benefit my needs today? Right? And it's something that I like to call as OPI, or other people's IRAs. If it wants to pop up, there it goes. Well, now it's going really fast. So I got to find a way to leverage someone else's IRA to meet my needs today. All right. So this is what I like to call the lending and the borrowing side. So what happened was a borrower approached me. He was a doctor. He actually owned a lot of properties and things, and he found a property. It was $120,000 to buy it, $60,000 to $70,000 to rehab it, and the ARV was $275,000. That's a pretty decent deal. You know, it wasn't bad. It wasn't like, oh my God, a super great deal, but this wasn't too shabby. However, he already purchased the property. He also already had most of the money for the rehab. And the only reason he wanted to borrow $30,000 was to keep his line of credit open with the bank. That was it. So this borrower said, hey, Derek, I will give you a first lien position on this property that's purchase price is $120, all right, at a 9% interest with 2 points. Now, if you guys are lenders, that's a pretty good deal. Ignoring the interest rate and the points and stuff like that, I got a first lien position on a house worth $30,000. I pray to God he doesn't pay me back, right? You know, that's a great scenario, right? But of course, someone like this, they're borrowing the money because they want to keep their line of credit open. So a couple things to point out is we negotiated on the points. They wanted a lower interest rate, but they were willing to pay 2 points on the back end. Now, if you don't know what a point is, it's usually a 1% of the origination fee of the loan. So we'll show what that looks like in a minute. Now, what happened here is this is an actual picture of the note. If you guys want my PowerPoint, send me an email and I'll send over the PowerPoint so you guys can actually look at it and see the terms and stuff that we had in here. But once again, I didn't have $30,000. So what I did was I used not just my IRA, I used my HSA, at the time my girlfriend, but she's now my wife. My wife's IRA, her dad's IRA, and look, my friend Brian showed up again. We used all of our IRAs, partnered them together to do this $30,000 loan. Now, the reason we did this, though, was really because of my wife's dad. My wife's dad's here. He's one of those guys that has the mattress money. You know what I'm talking about? He doesn't trust the bank. Right? That money is literally, you lift up that mattress, you're like, what the? Look at all that sitting down there. Like, that was him. It's in the cookie jar. So I convinced him. I said, hey, look, I want you to take $6,000 and put it in an IRA. All right, we're going to put it in a Roth IRA. And if you notice, I will cover the remaining balance of this $30,000. So you're putting in 6, I put in literally the remaining 24. Now, we're going to partner together. We're going to do a loan because he's never did this. He wasn't familiar with real estate. He didn't know what was going on with it. I said, let's go look at the house. I walked him down to the property, right? He got to see it be built up. And what was really unique is when he got his first monthly payment. Now, I don't know if we can actually see it on here. Let's see, where was the payments? They were pretty small. $225 was what the monthly payment was on a consistent basis. Now, that's not a lot of money, especially when he's only getting 25% of it, which I think came down to like $60, right? But what was funny is he was like, I'm not doing anything, and I just made $60 on a monthly basis for how long the note lasts, which lasted about 5 months in total. That's not bad. And at the end of the deal, when we got the money back, guess what he said? Hey, Derek, I don't know if Allie told you, but I have more money sitting over here underneath the mattress. Of course she told me, right? I didn't tell him I knew, but guess what? He goes, well, can we do something else with this money? It's like, well, absolutely. I need a lender myself. And suddenly we were able to develop this relationship where I can help purchase these other assets that me and my wife have now been looking at. So I love this case study because it's very easy to understand in the aspect of leveraging multiple IRAs. I wasn't only building wealth for me. I was able to leverage my wife's account and build wealth for her and leverage her dad. If I can build wealth for her family as well, it still stays in the family. Guess what? He's going to take me out to dinner. He bought me some cool power tools for Christmas. You know? So the profiting today and in the future, I think, was the key here. The borrower knew I had money in an IRA and profited today, right? I was also able to profit today by teaching someone about real estate and have them help me with my future investments. We were also able to profit in our IRAs tax-free, and we had security the whole time. When have you ever been able to put your money in the market and actually have security for it? Go be able to touch that property and see what it was. That was the key, was to walk my wife's dad down there and let him look at the house, see it, feel it. You don't get to do that with your 401k. What's it invested in? Oh, it's always the answer I get. So I opened both my daughter's self-directed IRAs. I had my brother open one, and we all met on a private loan, and it was pretty cool. Thank you so much, Shelly. She's absolutely right. So people do this all the time. They partner these multiple IRAs together to make a deal happen. So I always like to kind of end and talk about ways to build your network. So I'm pretty much done, guys. Is if you want to be a good real estate investor, get some business cards. Don't be shy about it. Talk about what you do. Have a brief elevator pitch and make sure you're going to these local RIAs and meetups. Meetups like this right here, the reason Phil and Melanie are hosting this, they want to make sure they get education out there to everybody, right? They didn't pay me to come on. They're not paying your speaker next time to come on, right? They're looking for good, educated people to come and just educate you all and help you out. So when you can, get to those RIAs, get to those meetups and help each other. And let me know if you have any questions, right? That email comes to my phone like a text message, and I'll put it in the chat box as well. But I am pretty much done from there. So if there's any additional questions, let me know what I can do to help you guys out.
I think the first time we met, Derek, you showed us like an example of how you could combine multiple IRAs. And that was pretty much
that was our first deal.
Yeah, that was our first thing. We had a small, we had Coverdale accounts for our kids, and then we had put it in about 3 different things together. We combined them all. So it's actually, it taught us because you showed us visually that it could happen. So I think that's great. This is very practical, great information. And,
yeah.
you know, I know we've benefited a lot. There's a few more questions here, I think.
No, that was me putting in the chat box. I was putting my
information. Oh, you did. Okay,
so that way
you
people
put that
can
stuff in.
grab it
Okay.
easily.
Oh, very good.
Yeah, so you can grab my email. Emails, like I said, they come to my phone like a text message. The phone number there is non-automated. As long as you call it Central Time, 8 to 5,
Okay.
you know, you're good to go.
Okay.
So,
does anyone else have a question? Okay, in that case, I do have a question. When would you consider funding an LLC to do a transaction, you know, through your self-directed IRA?
so if you guys ever want to look that up, it's a lot of people call it checkbook control. It's not a legal term or a marketing term, but a lot of times you want to start doing that, and I label it in 2 different ways. A, it's going to depend on your investments. if you're doing a lot of auctions like tax deeds, liens, going to auction.com or something like that, the LLC, having your IRA create a separate LLC for those type of transactions makes the most sense. Another way though is when you start doing a ton of investments, and what I would label as a ton is anything, let's call it 6 or more, right? When you're doing 6 or more real estate deals in a year inside a self-directed IRA, establishing an entity in the middle will save you guys so much money on fees you have no idea. You could be spending $300 a year versus $3,000 a year setting up an LLC and just making it cheap and easy. So I teach a whole class on that aspect too and going through those motions.
Now, like, if I wanted to combine both Mel and myself in that LLC, do we have to keep the percentages the same over time, or can that ownership percentage vary?
So if you're using your IRAs, you're going to put them together in an LLC and it's you and Melanie, yes, the percentages always need to stay the same. This is because the IRS says you two are disqualified from one another. You're married, right? So because you're disqualified, everything has to stay the same, but I'll change it. Phil, let's say you and I do it, all right? Okay. My IRA and your IRA coming together doesn't matter because you and I aren't disqualified. If I kick the bucket tomorrow, you don't inherit my money. If you die, I don't inherit your money. And so for you and me, nope, the percentage can change every single day if we wanted it to. We choose how to split that profit. So it only has to stay even because you guys are disqualified to one another.
Yeah.
Shelly, yes, we do. We can definitely help you with the checkbook control style IRAs. Absolutely. And then I see one from Valerie. Do you need to have a separate EIN? You don't need to unless you bring on some form of what we call UBIT or UDFI. What happens is if your IRA does have to file specific tax returns called a 990T, then you do have to file for your own TIN number or EIN number, Valerie, but believe it or not, Quest will take care of that for you even and make it easy on you. So good question. And there's no charge for that. It takes like 10 seconds to do. So, but most of the time, no, you do not need your own EIN number or TIN number. Good questions. Yeah.
So Derek, okay, go ahead.
Sorry. So sometimes you have these deals that come up and they are quick cash kind of deals. So how quickly can an IRA account fund those things?
Assuming your IRA is funded or is already set up and funded. All right. So you have cash in there, 24 hours to 48 hours easily. Right? The reason why is Quest is one of the few custodians. We don't charge our fees until after your deal is funded. This means I don't get paid until your deal is done. So it puts us on the same side of the fence. Now, if you're like, hey, I got to fund tomorrow and you haven't even set up the account yet, man, it's going to take me a day to set up the account. Where's the money sitting? Right? Well, it's that Fidelity. It's going to take Fidelity a day or two to liquidate it and a day or two to send the money. Right? And so a lot of times what really holds it up is someone waits to set up a self-directed account and they wait to move over the capital because they want to first find their deal, and that will slow down that process. But if the money's already there, it's really quick and easy. Good question. So, yeah, no worries. Shelly, oh, I see Shelly said, how do you deal with the members versus managers because of recent issues? So Shelly, you're a smart one. Me and Melanie were talking about this earlier, and a court case came out at the end of 2021 labeled McNulty versus Commissioner. There's also a lot of bills that came about from Congress, bills 138301 through 138314, if any of you guys want to look it up, and I can put all that down in the chat box. Pretty much with new rules and regulations, you as the individual cannot be labeled as a manager of the LLC that your IRA creates. Now we've gotten used to combining these two terms, manager and member, right? Only because when you set up an LLC, probably the attorney said, hey, well, you're the managing member. But these are two different roles. A member is the owner of the LLC, and a manager takes direction from the member. So in this case, what happens is your IRA is labeled as the member, and you need to assign someone that's not you to be labeled as the manager. Sometimes people use another business partner. Sometimes they use a sibling like a brother or sister. Sometimes they just use, an aunt, uncle, cousin, the attorney, anything like that. But ultimately, Shelley, they take direction from you because it's your IRA. Can you transfer a checkbook LLC IRA to Quest? Absolutely, you can. What first have to happen is we'd have to look at the operating agreement, see how it's created, make sure it's going to meet current regulations. If you want to ever look at those current regulations, you can look at IRS publication 4975. And I shout out a bunch of number guys. I am really a nerd. They pay me too much money to memorize this stuff. But which is all you have to do is email that over. Before we even set you up an account, Shelley, we'd just review that with you and walk you through what it would look like, just to make sure that you're not running into any issues in transferring it. And we don't want to raise any red flags with the IRS. So. Guys got some smart people on here, Melanie.
Oh, I'm happy. I'm happy people are asking great questions. I want to ask you to tell us about the Quest Expo, because this is one stellar event. And if you can make it to Texas for this thing, it's really inspirational. And I'll just tell you, so I was sort of, Phil bent my arm a little bit to get into real estate. And I told him I'd give him 2 years. Well, we're coming up on 4 years this month. And I turned to him at the second Quest Expo and I said, you're right, this is what we really need to do. And, I still have the dietitian itch and I still, have my hand in it a little bit, but I remember the Quest Expo being like it became very clear to me that this is an effective way to build legacy, and lead, have wealth, generational wealth. So thank you.
One of the things that we try to do at the Quest Expo is you have to understand a big part of my job is I get to travel across the US and I get to speak at a lot of local RIAs, a lot of what I call the mentorship programs, all those type of things. And a lot of them are good. Some of them are really bad, but hey, it is what it is, right? Spoken at things from like lifestyles all the way down to, the small RIA. But we noticed that there was a big need for education. So what we try to do is bring in 30 to 40 speakers from across the US that talk and touch on different topics in either real estate, and this year will be the first year we do cryptocurrency as well. All right, none of them are allowed to sell programs. We bring in attorneys and CPAs to do attorney and CPA questions for you guys completely free of charge. And lastly is just in general, the networking with other investors. In 2019, the first expo we did, in 2018, the first expo we did, we had about 550 people show up. In 2019, though, we broke 1,000. So this year, our goal is to hit somewhere between 1,300 to 1,400 people that will be there. That you guys got to remember, are active investors are looking to be active investors. So we got the vendors. If you guys need vendors for anything, and it's just a great place to, and like you said, Melanie, to meet people, to figure out what people want, need, etc.
Excellent.
Yeah.
Do you have any promotions, Derek, right now going on?
So yes and no.
Okay.
So if I guys, I'll put a promo code down below, but I'm going to ask you guys don't get me in trouble.
Okay.
Is that fair? So
you don't have to say it online. You could just maybe put it in the chat.
Well, so here's the thing is right now it's still what we call the early bird pricing.
Okay.
Okay. So early bird pricing is obviously going to be cheaper than anything else. And so there's no discount codes or anything for the early bird pricing. However, I had to do a big charity event recently, and they gave me a separate coupon code just for the charity event that is active until the end of this week. All right. So if you just go in there and you just type in the coupon code, and I'll give it to you guys here in just a second, you'll get an additional, and I don't know if I can't remember if it's $30 off or 30% off the early bird tickets.
Wow.
Yeah. So there's the link I just put in the chat box for the Quest Expo if you want to get tickets to it. And the coupon code is case sensitive, but I just put that in the chat box as well. So leverage that if you guys want to get a ticket before Friday. Otherwise, after Friday, they're just gonna stick to that normal pricing that you guys see on there. So
I don't.
Is it in Houston again this year? Houston?
yes, it will be in Houston. Oh, sorry, poor Shelly. I was messaging Shelly directly. I apologize. Hold on. There's the link for everybody. And that is the coupon code.
Thank you. Thank
No
you.
worries, guys.
Well, that was a real, we usually have, sometimes we try to give giveaways and things at our meetups. So that is a giveaway. If you guys get a chance to make it to Texas, Houston for this, we would love to have you. It's a great event and you will learn a ton and network with amazing people. So.
And one of the things is you'll learn, it'll open your mind to what are all the different possibilities, listening to people who are doing things that perhaps you're not, like learning about private lending and using your self-directed accounts. Of course, notes, we've talked about buying and flipping real estate, all sorts. So I agree with Mel. It's a great event if you can make it. Okay. Any last things, Derek?
Nope, I've had a couple of private questions that popped up, so I've been answering those privately and kind of going through those motions. But if anyone does have any questions, just let me know. I'm easy to work with, easy to get a hold of. You know, Phil, Melanie, like you said, we've known each other for a couple of years now, and I appreciate it. You guys have been great clients of ours. You know, you're always active. You're always looking for the next thing, and so thank you for that. You know,
Thank you.
Thank you.
yeah.
So this concludes the Michigan Note Investor Meetup with Derreck Long from Quest Trust Company. Thank you for all attending, and we'll see you next month.
Take
Thanks,
care.
you guys.
Thank you.
Bye, guys.
Take care. Thanks so much.
You're welcome.